What are two Singapore stocks that have came into my watch list over the past few months whereby we have seen some upside, but there could be more upside as well, and perhaps you could also watch them and position yourselves to ride them as well. Hey guys, Joey here, top tier miser, trader in Phillip Securities, and in this video I'll be showing you guys two Singapore stocks, and these stocks are in the shipping sector. Yes, I know it might sound a little bit boring, but these stocks have gotten us a pretty good gains, I would say, over the past couple of months, and you might want to watch them as well. So I'll show you guys two stocks. We'll dive into the charts as to why I like them, when we first covered it a couple of months back, why I still like them now, what are some of the support levels that have came out over the past few weeks as well. Let's go. So the first stock I'll share with you will be this company called Samudera Shipping. Right? So we first covered it, I would say, a couple of months back in January, whereby we broke this very key resistance at about 65 cents to 75 cents. So there are some upside targets that were drawn all the way to like 85 cents, more than 28% upside. Of course, targets were revised higher to about the $1. So that was like in January, on the 5th of January, that was what happened. And of course, some of my clients were alerted to it by WhatsApp as well. So let's take a look at where we are right now. So you can see that this is Samudera Shipping today live, all right, and today is the 11th of June, right? So you can see that we have traded up to like about $1. We have hit our target at about $1. So let me just show you what has happened over the past few months. You can see that we broke these very key resistance. Of course, there was some corporate action like dividends, so prices had adjusted downwards a little bit. So that was where we broke in January. On the 5th of January, we broke like the 60 cents resistance level, consolidated a little bit. You can see another break above the resistance at about 70 cents. So let me just go to draw another resistance level right over here. So that was where we kind of broke that 70 cents again, traded higher, consolidated, started to push even higher. So what would be kind of like the near-term support level right now? So support has been, has risen from about 60 cents, whereby we rebounded all the way to like 70 cents, and we may have found a higher support level right over here. There will be another support at 85 cents. You can see that was where we were consolidating, right? It's a bit of a resistance level, just like last year in May, June as well. For a year, we have been consolidating below 85 cents, and same thing, just like 1 month back, we broke 85 cents, pump, started to push even higher. So support level has gone from like 60 cents to 70 cents to 85 cents, and now we may have found an even higher support. So let me just draw it for you. I think right now we may have seen some support coming back around that 0.95, that 0.95, 95 cents, maybe all the way up to a resistance at about 1.05 to $1.10. So we are in the midst of a consolidation right now. So I think the range would be maybe from a 95 cents all the way up to $1.05 or maybe $1.10 if you want to give some leeway. All right, so let's just put about 1.05 for now. As you can see, right, when we broke in January, right, when we broke this resistance at about that 60 cents, of course, there were signs of the short-term trend turning up as well. So why did I cover this stock in January? Well, because when we broke this resistance level, that 60 cents level, that was adjusted downwards, in terms of prices, right? You can see that the 20 days moving average line started to point up, right? So we break a key resistance, 20 days moving average, which represents the short-term trend, started to turn up. So that's a sign of strength in terms of the short-term, plus we have got on to a higher consolidation phase. So that's a good thing. And of course, when we break this resistance at 60 cents, it now turns into a support level. So let me just turn it to green so you can see the support goes from like here to here to here to here, all right, and the support actually gets higher in an uptrend. So this is Samudera Shipping, one of the stocks that is in our watch list because it is an uptrending stock, and we want to think about riding stocks like this in an uptrend. Stocks that are strong, stocks that are consolidating, a while, couple of weeks, maybe 1-2 months, and then breaking a resistance level, pushing higher, and then consolidating again, and pushing higher again, and consolidate. That's what we call a healthy uptrend. We don't want stocks to go up every single day, all right? It can be really dangerous, very risky as well. But if it does consolidate and for a while before pushing higher, I think that's what we call a very healthy, sustainable uptrend, and that's what we like as well. So as it consolidates upwards, as I mentioned, we find higher support levels. So this is Samudera Shipping, one of the stocks that has seen a reversal from like a downtrend to an uptrend. All right, right now it's still an uptrend as long as we hold above the support level. And of course, this higher support I mentioned would be about 0.95, 95 cents. You can see this 20 days moving average line. All right, since we've covered it in January, right, this 20 days moving average line has been sloping up. Right now, as you can see, guys, this 20 days moving average line, it is still sloping upwards. In fact, it coincides with also where the 95 cents horizontal support level is. So about 95 to maybe 97, 98. I think that's where some bargain hunting is starting to come back. So if you want to try to get in on dips, maybe you have a plan to stop loss or to get out. It breaks 95 cents because that's where we may see some weakness again. You may start to retrace lower, but anything above 95 cents higher support level, I think it looks pretty good. All right, and if we were to break the 105, so look at this, right? This $1.05, we are pretty much back to where we were somewhere in March last year. For more than a year, you can see we have been trading below the 105, went all the way down. So this resistance level kind of like coincides with this where we are right now, 1.05 to 110. All right, that is pretty much the resistance that we've seen last year. We are actually seeing some profit taking near there, which is normal. As I say, we're going to see some consolidation below a resistance level as it swings up and down, up, maybe down again, up and down, and finally one fine day, pump. All right, we break 105 to 110. That is where we can see more upside, like what we have done when we broke that 70 cents. Same thing, like we broke 85 cents. That's what potentially can happen again. We can start to push even higher. So this is Samudera Shipping, one of the stocks that came to my watch list over the past few months. It still looks pretty good as long as it stays above that support that I talk about. All right, let's move on to the second Singapore stock that I'd like to share with you that's in the shipping sector as well that have came to my watch list over the past few months. So that would be Yangzijiang, YZJ Shipbuilding, right? So this is what happened, I would say 2 months back, right over here. There was some support being found at $1.70. There were some upside targets that were drawn all the way to about the $2 level, about 16% upside, as you can see over here, all right? So that was like in middle of May. Of course, we have raised our targets even higher when we broke like the $1.95 to $2 resistance. Target was raised all the way to about $2.30. That's another 15% upside, and we raised it even higher when we gave way. I mean, this $2.20 resistance gave way. We raised it all the way up to $2.50. So that was what happened for Yangzijiang. Let's take a look at what is happening right now. Okay, so this is YZJ, Yangzijiang Shipbuilding, at $2.45 right now. So as I mentioned, right, just about 2 months back, we were right at this support level, right around the $1.70, right? So that was where we started to see some bullish reversal candles coming out. There were signs of the 20 days moving average line also starting to reverse back up. So that was where targets were drawn all the way to like 190. Of course, $2 gave way as well. It was revised to 220 and even $2.50. And by the way, guys, if you want to get ideas like this, right, you want ideas like this by WhatsApp on a daily basis, make sure you check out how you can become a VIP client of mine in Philips Securities for free at no additional charge, 100% free. All right, and this way, if you have a trading account under me, you do get some of these ideas live as it happens, free daily, right? So you do not pay anything more. So the link's right below the video. Check it out if you're not yet a VIP client of mine in Philips Securities, especially if you have a trading account in Singapore. I mean, you are trading the US markets, Singapore markets, whatever markets, right? And you do not have any service from your own broker. It's just like a platform or online website. You just log in and place your own trades. Nobody send you any ideas or videos or WhatsApp or training, or you don't even know who your broker even is. So make sure you check it out. Click on the link below to find out how you can become a VIP client of mine to receive ideas like this on like Samudera Shipping and even Yangzijiang. Right, so let's get back to this analysis. You can see that we broke this resistance at about $1.90. So that was where we had a very key resistance level. We were trading below it for like March all the way to April for like 1 over a month, and finally we broke it. Targets was revised, and you can see, right, for Yangzijiang Shipbuilding, we have been in an uptrend in the longer term, right, since last year. In fact, we can also draw an upward sloping channel support line connecting the lows. Look at this, right? The lows actually gets higher and higher, right over here. So the lows actually get higher. So it's a pretty strong uptrending stock in the longer term. Of course, in the short term, right, we did see some weakness. Look at this, right? In like August last year, we saw weakness whereby the 20 days moving average, the green line, started to slope down, start to flatten out, and then we saw the reversal. Same thing, right? What happens over here, right? In April, we saw the 20 days moving average line starting to slope down. So when the 20 days moving average line, this green line, would slope down, it can mean some short-term weakness. It can mean that the short-term trend is turning down. So we try not to be against the trend. We want to be along with the trend, especially if you're thinking of buying. We want both the longer-term trend and also the short-term trend to be up. So when that happens, you want to wait for like the 20 days moving average line to slope back upwards, prices above it, and that's where you could try to time your entry to get in to ride the reversal as well, whereby when that happens, both the longer term trend and also the short term trend is up. Does it make sense? All right, so, and that's where you can wait for like a breakout as well. You can see as you broke the 190, started to push even higher. Let's see what would be the support level right now. So you can take a look at Yangzijiang. You can see at the past, right, there is pretty much is all-time high right now. So $2.50 would be a resistance level that was originally our target. So let me just zoom it for you and you can see. So that's 250. So we have kind of like hit it to our target, and there is some selling that is happening over the past 2 days. So the high is like 250, today high 250 again. So a bearish candle coming out. So I would say that is pretty much the resistance right now. We might consolidate for a while below 250, which I think is healthy because we don't want to just break 250 and start pushing to 270, 280, and then it starts pushing higher. That would be a little bit more risky. If that happens, you definitely want to take steps to protect your profits by raising your stop loss upwards. All right, but right now 250 would be a resistance level. We might just consolidate below it for a while. We might see maybe some support coming out as well. So maybe if I can draw another support level, it would be around the $2.30. Why? Well, you can see that over the past week, all right, we have seen a couple of bullish candle. Another one right over here, we have a doji, a spinning top, whereby buyers came out near the $2.30. So that's where, as it approached 230, we might see some bargain hunting. So the range would be from 230 all the way to $2.50. So if you have got in previously, you have right the upside, anything like from 170 to 190 or $2, great. You definitely want to take steps to protect your profits. Maybe you have a stop loss, below 230, or just in case that support were to break down, well, you can get out, you still make money. And if you are one who have not got in and you want to think about getting in, you want to write more upside, well, you can time your entry to maybe try to get in near 230, 235, maybe, I think in the range of 230, 240 as it dips. That is potentially where, it's slightly cheaper. It looks a little bit more attractive in terms of a price reversal all the way to retest the $2.50 critical psychological resistance level. All right, that's it, guys. So these are the two Singapore stocks that have came in my watch list over the past few months. Samudera Shipping and also Yangzijiang Shipbuilding. Both of them are in the shipping sector. So I hope you like this video, guys. If you like this video, you found some value, and you have taken note of these two stocks, you have put it in your watch list, go ahead to give me a like, smash the subscribe button as well, hit the follow button so that you will not miss out on any videos like this. And as I said just now, right, if you want to find out as to how you can get some of those ideas by WhatsApp daily like these two stocks, make sure you find out as to how you can become a VIP client of mine in Philips Securities for free at no additional cost. The link is right below the video. Check it out, and I look forward to work together with you even closer and even sending you ideas like this, much faster than it takes to produce a video like this. All right, and if you want to find a little bit more in terms of like this entire strategy or how we have a system to guide us on entry and exit as well, attend one of those free webinars. The link is right below the video as well. Joey here. Thank you so much for watching. Take care.